You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's popping off in the world of vol? Well, let's find out together, shall we? It's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as from the network that, despite my best efforts 18 plus years on, continues to grow. We've added, 3 new shows in the last 6 to 8 months? Wild times, including a new one hitting this week, thanks to all of you who've been checking out the Hot Options Report. A lot of you have been asking us for ages for kind of a bite-sized digest of the hot flow from that day. You're in luck. You got it in your hot little hands starting this week, coming at you every day. After the close, once all the data is finalized, we get it out to you over there. It's available in a bunch of different formats. Of course, podcast is our main, but you can also get it on the old tubes and a variety of other social media platforms. We'll cut it up into little bite-sized chunks for you on various underlyings and tickers. There's been some wild ones of late this week. Lucid, Open, all sorts of weird stuff making it into the top 10 this week, which makes it fun. So if you're not checking out the Hot Options Report, it's a 10-minute commitment. So it's a fun one. If you're listening to the full network, you're already getting it. Yet another reason. I know there's a dedicated Vol Views audience out there, and we love you. But if you're not listening to the full network, you are missing out on literally a dozen other shows now that are coming at you. If you like options content, chances are we got something for you. So check it out. And of course, if you're hardcore, if you think you're ready for it, you want to check out, let's say, the awesome Pro Q&A session, supersized, that we had earlier this week with our friends from Fidelity. You want to join the official after party of Vol Views, known as Options Oddities, coming up after this show. All the other fun pros, giveaways, exclusives, theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old Vol Views program today, let's go out to the hinterlands of Chicago first, where we are joined once again by the once future and present Dr. VIX, a.k.a. Mr. Russell Rhoads, now corrupting young minds at the University of Indiana. Mr. Rhoads, welcome back to the show. How goes the corruption, sir?
It all goes well. We're getting a nice weather reprieve here in the Chicago area. It probably feels like where the Rock Lobster is used to being in the summertime.
Yes.
A nice 60-degree morning after I felt like I was back in my hometown of Memphis for a couple of weeks. So as soon as I can get done with this, I'm outside.
So you're saying Chicago feels like
with the puppies.
Chicago feels like a hellish landscape that is beset by clam pirates on all sides. That's what you're saying. I do believe.
Oh, it's cool.
I do believe we are joined by the aforementioned Rock Lobster. Let's see if he has survived clam piracy for another week. Mr. Rock Lobster, are you there? Can you hear me, sir?
I can hear you.
All right. He lives. He lives. He has survived the battle for yet another week, sir. So I'm glad to hear. You know, it's always 50-50 with you. When we come on Vol Views at the end of the week. Will he have survived another week? Or have the clam pirates finally claimed him? I'm glad to see, sir, you have survived for another week. Has the market survived? Is vol surviving? Let's find out. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, some vol trading and trending analysis, all sorts of fun perspectives. It's another one of those days where if you don't like where we are, just wait a few minutes. We started off the day green to mixed, and now we are trending towards the red, if ever so slightly. S&P off about 0.15%, so we're not talking set your hair on fire type of downside. NASDAQ, similar percentage. Dow leading the charge to the downside today, off about 0.5%. And our old pal VIX Cash has been fluctuating. It was weird when we started running the numbers again this week. It was the second week in a row where we were literally unched on most of our indicators at the start of the show, which is kind of weird. We don't see that too often in 2 weeks in a row. We did have to go back, make sure everything was running and working properly behind the scenes, and it was. It's just one of those weird times out here. And of course, it is summertime, so you do expect a little bit of laziness on the vol front if it was a usual market right now. So coming in 2 weeks in a row, almost literally unched, maybe not that unexpected in the July timeframe, but it always surprises us here on the show. Now, as the show has kicked off proper, we are starting to firm up a little bit in the vol space. We were at about a 16 3/4 when we kicked off the show, up not even half a point, about 0.4 of a point. So we had ticked up ever so slightly. Volley, same deal. Volley was literally unched on the week as well. Now it's up about 0.15 at a 13.65. Volley, of course, the just the facts, ma'am, vol, the straight at the money vol out there from our friend Mr. Nations, who probably will be joining us again. Just joined us on the Pro Q and Longo. Probably be joining us on that show or on this show again. He can't get enough of talking vol here. And then, of course, the vol of vol, a.k.a. VVIX, at a 95, up about 2 points from where it was this time a week ago. So yeah, we wait 5 minutes, we might have another vol market entirely. Let's go around the horn the way we started. Let's go out to Mr. Rhoads first. A weird week, literally unched until about 20 minutes ago. What's been catching your eye, sir?
Yeah, we had one little spike, but the spike didn't even get us to the 20s, which made me do some data dumpster diving. And this is on track to be the first month that we have not surpassed 20 during the month since July of last year. So that way we can actually be transitioning into a low volatility.
You're saying the Loggins is dead, at least for now.
Things that the Loggins might be dead. Although all it takes sometimes for the Loggins to come back is a little complacency.
Yeah.
But we definitely got some complacency going on. But on the other side of it, and I know we're going to talk about the curve, but man, the futures premium to spot right now it's concerning. Do people know things? Are they sharing that they know things through not shorting the August VIX future?
It's that guy who bought those deep in the money puts. We'll get to that in a little bit.
Yeah, we're going to get into a fun trade.
He knew something. Or maybe not. Maybe he forgot to read his Natenberg back in the day. But yeah, you mentioned that little dust up we had earlier this week. You're right, Powell and Trump going at Trump mostly going at Powell, not really the other way, and floating the idea maybe he was going to fire him. Markets, as you might expect, going into a tizzy, a bit of a tailspin there. Vol spiking, as you mentioned, not quite getting to the 20 handle, I think around 1935, somewhere in that realm in the VIX cash, and then retreating just as quickly once the news came out that actually, psych, I wasn't planning on firing Powell. I think if we didn't have that in the middle of the week, Mr. Rhoads, and we probably would be a little bit lower than we are right now. That seemed to just elevate us and just reset the gun enough to gently drift back to where we are unched at the end of the week. Do you agree, sir? As I toss to him, we lose him. The magic of technology. All right, out to the land of the rock lobster we go. Mr. Rock Lobster, what is catching your eye in this vol-laden week? And then also, what are your thoughts on the little dust-up we saw in the middle of the week and its impact on the vol market, sir?
This SIBO volatility index thing, it's supposed to move. Did you know that?
Nope, it's supposed to be glued and literally unched week after week, sir. To the point we have to check your data and make sure it's working.
If you want to look at the VIX futures in the last 2 weeks, unched. August future is basically unched. Ever since July 9th, when Trump kicked the can down the road, essentially what happened, in my view, is we're basically very, very much like that last cycle into July 9th or into the election cycle, or this event is so big, it's freezing the vol. All those, whatever the variance swaps do to adjust for increases in volatility, that's what you're getting. So basically the VIX futures aren't going to move until August 1st. That's my prediction. They might move up a little if there's a dumb tweet like we had last week. We had that little bump where Trump says, oh, I'm going to get rid of Powell. Just kidding, right? And then, so he floats the balloon. The market hates it immediately. Okay, this might not be a great idea because he's the only guy holding the line. Like before, he was asleep at the wheel probably. And now he's, oh, okay, nobody wants to cut spending, so I'll make interest rates really high. But from looking at the VIX futures, they're not moving because there's an event. It's just like it was going into the election, just like it was going on July 9th. Semi going into April 4th, although everybody thought Trump was bluffing. But again, I don't see those futures decaying like fractionally until the 1st of August. So if you want to trade vol, go to the beach, take a nap, and put your trade on the 31st. Because I don't see him moving.
What's that saying that Brian Overby has? If you want to do a trade and it's not good, just lay down until the urge goes away.
Exactly. And I'm like, I'm not buying any more VIX puts. I know they're all ridiculously cheap. They all look ridiculously cheap, but they're probably going to get a little cheaper in the next 2 weeks.
I was thinking about you when we had that little dust up on Wednesday. I was like, oh man, we were heading towards, I know you got some 17s, probably some 16s in your back pocket. We were heading towards those looking pretty good. And then bam, that little dust up and they're all gone. I couldn't
get rid of my upside fast enough. I had to get alerts out to students. I still missed some. It was like such a frustrating pop. I sold some stuff, but like some upside I had. But overall, it was just not all I could sell. And I tried to sell everything. Basically. So that was a little bit annoying.
Yeah, it was the cliche example we always talk about of you have to monetize your upside quickly, but this week it was about as quick as it gets.
You had about 8 minutes. Literally 15 minutes to catch that. And I was live with my students like, listen, I know that's not what you want, but we broke into zone 3 and you know what? We ain't going any higher. You take it now or you're going to be grumpy and disappointed in an hour. And sure enough, so I'm glad I sold what I sold. But anyway, that is the nature of volatility. Like, it's also the nature of a market where realized vol is 8%. You could talk about who you don't like, the budget, the whatever, but the reality is realized vol is 8%, and that's what makes bull market. That is an artifact of a bull market. People just buying some stocks, sitting around, not freaking out, buying some more stocks. It's just what it is. Like, a lot of bull markets trade at a very low volatility. So that's what we got. So you can say, oh, we're too high. We're like, okay, whatever. But all I know is you got 7% realized vol over the last 10 days. So it's what it is. You can fight it or not.
I know there is a cadre of the audience out there that it's anathema to them to work limits on their VIX upside because they buy it. And in their heart of hearts, they want that move to 80, right? They want to capture that. And they think if they have some VIX upside, they're in the game. They're in the hunt. And if you put a limit on that, you're capping all that glorious upside. But this was yet another week that you should have at least some of it on a limit, because otherwise you get nothing. This was a week if you let's say you have a job, you have an actual life, you're not glued to your screens all day, and you were doing something for those glorious 15 minutes. You're a surgeon, you're in surgery, you can't close up the patients to go sell your VIX upside. So yeah, it's just one of those things. This is why we say, I know it hurts sometimes to work that limit. I didn't buy these VIX calls just to get 30%. I want to get 8x. That's the dream. But yeah, sometimes weeks like this in particular, it's very short-lived. And this is why we say all the time, you got to be judicious on monetizing that upside. Let's roll on into the land of the vol surface. Really quickly before I get there, we have earnings season did kick off this week. Just a reminder, if you like earnings vol, we have all that data for you over there on the website completely for free because A, we're psychos, and B, we like you. So theoptionsinsider.com, click on the options news and articles tab. You can get years worth of earnings vol data now. Again, some of, if not the best earnings vol data in the game, and it's completely free. It's bonkers. So right now, the earnings season just kicked off. We have it updated. Only the most recent report, only 19 major firms that we track had reported. So take this early number with a grain of salt. But our long-term average is hanging out at 105%. So that is still pretty lofty. That's down from, I think it was 119% not too long ago. Keep an eye on those numbers, all that data available for you for free as the season goes on. You'll have a lot of great data to sink your teeth into if you are so inclined. As we keep on rolling out to the land of the vol surface, and our old pal July, aka July, from where Russell's from, rolling off the board out there this week. August slotting into the pole position, ticking up ever so slightly as the show had begun, up a little over 1/4 of a point, about 0.3 of a point. The SEP future slotting into the number 2 spot, up about 0.5 point. So again, that front portion of the curve firming up ever so slightly. If we look into the middle realm, so going out to October, pretty much through the end of the year, we're just glued at a 21.5, just sitting there. And then if you get out into the beginning of next year, you're a little bit north of the 22 handle, going all the way out to March of next year. So the end of Q1, which seems like an eternity from now, you're at about a 22.5, 22.60 out there. So that's your curve right now. Mr. Rhoads, sir, what, if anything, is catching your eye in the vol surface this week?
I already gave up sorry, I'm having some audio issues. I already gave up the lead on this one when I talked about the premium of August through relative to the spot right now. And that just seems to be the one thing that's really standing out, is that people, regardless of what seems to be going on, and that the spike gets swatted down like the whack-a-mole once again this week, there seems to be some reluctance around getting short volatility through the middle of August. We have had some vol events in early August. We, forever within our industry, we always think of September as being that treacherous month. We've had a couple of situations out of China that have resulted in volatility spikes. We had, was it last year? The first week of August, we just had a very scary move out of volatility.
Yeah, August 5th. That was the big meltdown.
That's what, yeah, I thought maybe people are bracing for that. I really feel like with VIX around 16.5 and it being summertime, that an 18 handle on the front month at least is being expected, or would be expected in my mind. But again, I just think that there are some concerns that we're not going to make it through the year without some sort of a volatility event. It continues to feel like that.
Our chat is lamenting the death of the Loggins. There is definitely a core audience that loves the Loggins, wants it on every show. And there's some out there who do not. I've heard from all of you. But there's definitely a core that loves the Loggins and misses them. They're lamenting that we may not hear them again for the rest of the year. I don't know. I wouldn't go that far. I think we could have a Loggins appearance again before just one tweet. One tweet is all it takes to get there, listeners. So yeah, interesting stuff out there. Mr. Rock Lobster, same question for you, sir. What is catching your eye in the vol surface this week?
Mostly just like I said, Russell was noting the August future. I think it's all around the event. It is classic earnings style where you know an event's going to happen and volatility continues to rise at the strike because the value of the straddle does not change very much. That is affecting the whole curve because people don't want to sell their longs and they want to hedge. So that just keeps making vol blow up. And it creates a very steep volatility curve. If you think about it like this, my students, you got 10-day realized at like less than 8%. You got 9-day VIX is 1330. VIX is 16 and change. The August future is over 19. That's a lot of volatility built into the system for stocks that only moved 1% this week. So again, it's Traders are waiting for something to happen that hasn't happened yet. The biggest item, you got 29.30. The Fed, they're not cutting, and I think the market wants them to cut a little bit, but I don't think they will. And then you got Trump basically being done with this 15% tariff on everybody and tell them to all go pound sand. And that's reflected in the vol curve, in my view.
All right, let's see what else is reflected in the world of vol out here, listeners. And looks like something is popping off out there just in the last, since we started the show, because VIX options have gapped up a couple 100,000 contracts. So I'll see if I can suss out what's going on, because we were just barely at 500,000 contracts right as the show started, and we're already up to nearly 750,000 now. So something popping off out there. Like we said, 722 on the tape right now. The ADV 741, that's down 42 from this time a week ago. But obviously some action going up out there. Speaking of action, let's see what kind of action is afoot. Obviously July rolling off the board. That usually takes some OI with it, listeners, which probably explains why it only cost you 159,000 contracts to break into the top 10 in VIX land this week. Also, we are in mid-July, so not seasonally a banger period usually for vol. By the way, we are at 9-1 calls over puts. So one of our puts has shuffled off this mortal coil. It was a July put. I think it was July 17. So those have gone the way of the dodo. Let's see if we can find its brethren out here. Number 10, $1.59 of the AUG 60s. I like these weeks where we're right at it as soon as we start. We're not talking 20s or 22s or 18 puts, anything reasonable like that. We're talking 60s right out of the gate. $1.59 for number 10. Number 9, $1.60 of the AUG 40s. Maybe you like that AUG 40-60, listeners. Either way, number 9, AUG 40s. Number 8, $1.82 of the AUG 30s. So far, the most reasonable strike we've seen on the board. Let's see if we can find something better. Number 7, here's Waldo, 191,000 of the AUG 17 puts. I don't know what it is about that 17 strike on the put side that has captured the imagination of so many people. The July 17 puts were just the contract for weeks out there, every day, putting up tons of paper. Size OI, that's obviously gone now. The AUG 17 puts slotting into the number 7 spot. I have a feeling if they're like their July brethren, they're going to gain a lot more OI over time. Folks seem to really like that 17 put strike. Either way, number 7, $1.91. You like that? Are you in on the 17 puts, listeners? Are you just washing your hands at weeks like this where you thought you had a good week on the erosion side, then you get a little dust up midweek and it's all gone and you're right back to unched at the end of the week? It happens every now and then in the vol land, listeners. Number 6, $1.97 of the AUG 20s. Dare I say it? Which one do you like better, AUG 20s or the AUG 17 puts? I got a feeling I know which way you're going, but those definitely have to be considered the two most quote-unquote reasonable strikes on the board this week, because number 5, right back at it, 220,000 of the SEP 80s. Ah, yes, the old SEP 80s, everyone's favorite. Number 4, 232,000 of the AUG 42 halves. Man, we got some wild strikes on here this week. Number 3, 241,000 of the no 47 halves. Obviously, 42 half, 47 half, those strikes have been popular for a while. It's just fun to see the array of strikes we have to the upside this week. Number 2, 335,000 of the AUG 35s. And number 1 with the bullet, 398,000 of the AUG 25s. Which of those is your favorite, listeners? Which one of those is your huckleberry? Even though I know for a lot of you, your favorite is Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, regale us with your trades of the week. And then a little birdie has told me you have uncovered once again someone willing to commit stupid amounts of capital to get short some VIX, sir. What have you found this week?
First, we always refer to stupid trades when somebody like maybe buys a 17 call and an 18 call. I'm going to say the trade I'll talk about after the weeklies is stupider. Monday, VIX at 1730. Somebody bought 100 of the July 23rd 18 calls, paid $1.35, sold 200 of the 22 calls for 50 cents each, and bought 100 of the 26 calls. Nice fly there. They paid 67 cents for it. They probably would like to see VIX. Actually, I think they would be thrilled if VIX were at 22 come next Tuesday afternoon, but probably hoping for a bump to the low 20s that lasts a little bit longer than the one we saw this past week so they can do something with it. So if they're thinking about monetizing it, stay glued to the screen. These spikes don't last very long. On Tuesday, we had VIX at 1695. Just an outright buyer in the 20. You're talking about strike prices. I see a lot of interest in 25 calls. And somebody bought 1,000 of the August 13th 25 calls for 90 cents. Maybe looking for that, the seasonal August spike that we worry about a bit. Then on Wednesday, pretty good sized trade. Monday and Tuesday were dead as far as weeklies go. Wednesday was the big day. Thursday was so-so. But on Wednesday with VIX at 1725, somebody bought 4,500 of the July 30th 22 calls and sold 4,500 of the July 30th 26 calls. The net there was a cost of 36 cents, expecting a spike higher than anything that we've seen in July for sure there. And then also we had a sweep buyer of about 3,100 VIX July 23rd 26 calls, and they paid a penny above the offer. We've talked about liquidity and weeklies. In order to get done here, they had to pay a penny above the offer. They paid 29 cents when the offer was at 28 cents. And then yesterday, another big trade using a lower strike, but using the July 23rd options. Somebody bought 6,858 VIX July 23rd 21 strike calls for 32 cents. Offer side was 29 cents when they did that. So they gave up the offer by 3 cents to get filled on that. Yeah, I know. I see. I love that I can see you guys now and the furrowing of the brow and the gnashing of the teeth. But that would be it for that's it for the weekly stuff. And you want to talk about
regale our listeners with your favorite VIX trade of all time, sir.
Oh my God, I don't get it. I get stuff, but I don't get it. So when I was looking around at the weeklies, the way Bloomberg alphabetizes or whatever, the next thing that shows up after the weeklies is the December options. And I came across a small December trade that probably flies under the radar of a lot of people, but listen closely because I am not misspeaking. Somebody on July, they did this trade in two different pieces on July 8th and July 14th. They bought a total of 250 December 200 puts for 175.54. And then they sold 250. They bought 250. They sold 250 of the VIX December 20 puts for $2.64, resulting in a net cost of, I think, 172.90, I believe. Yeah, 172.90 is the net cost on that. Their break even is 27.10. Maximum gain is $7.10 if December VIX settlement is below 20. And the maximum loss is, of course, what they paid for the trade, 172.90. I don't think they'll realize the maximum loss because that would involve VIX over 200. And the running joke there is if VIX goes over 200, I'm heading next door to the guy that's got all the guns in the gun safe and a couple of nice sniper perches on the third floor of his house because we're going to be fighting for food in that case. I need help. I have no clue what these people are thinking.
Yeah, this is analogous to what we were talking about a few weeks ago. Even then, it was a much lower strike put. It was a 50 strike put, I believe, or something like that. And even then, we said, why are you outlaying all that capital? If you want short position in VIX or even a synthetic short, there are ways you can do it without outlaying all that capital, let alone all this capital. I see absolutely no utility in going up to the 200 strike that you can't accomplish with the 100 strike or the 80s or the 7. Pick your meaty in the money strike of choice. I don't see any utility other than you just really want to tie up a lot of capital and put it at risk for no apparent reason. I don't know, Mr. Rock Lobster, this, what is it, 175 point wide put spread, something along those lines. Do you see any utility to this, sir?
It could be like an interest rate play. Could it be?
You know what? I ran the numbers on it, and it's about a 4% return. right under a 4% return based on the capital put up if we close below 20. If I annualize that and I take it comes to about an annualized 10%. The other side of it, the thing cost about $4.3 million. So the other side of it, and can earn some interest off of that. But if they get the maximum profit on this, they basically are putting up 4.3 million and they're getting 2 million at the end, which is a pretty low return. If you annualize it, again, it's maybe 10%, but there is risk this thing doesn't work. We've got, going back to December 2006, what is that? We've got 19 settlements for December standard VIX futures so far. 10 of them have been below 20. One of them was 51.29 in 2008. Otherwise, with the exception of the 2008 data point, this trade always made money. But I don't know. I don't think it's worth the risk is not worth the reward.
No, the tying up capital.
This is the kind of thing that you could lose your job over.
Yeah, you're tying up capital. The return is
$200,000.
The return is nominal. If we do get a vol again, you're out. Your firm is out. So yeah. I don't know if any of that is worth the 4 to maybe 10%.
And what if we get a Volmageddon between now and December?
Yeah.
And all of a sudden,
you're out.
This thing, you've got a terrible unrealized. Is somebody going to panic and take it off? So
yeah, probably. You're going to get that tap.
I'll keep paying attention to that 200 line. I don't get it. I would love it if somebody could say, here's what you're missing, Russell. And if they sold it and took in a bunch of income, I could go with it. But they paid for this thing. So I can't really, and I've had more time than the two of you to think about it. And again, I showed Mark before we got started, I showed a table that shows how this trade would have worked every year at settlement. And there have only been a couple of times that there was one time it only would have made 90 cents back in 2018. Even made money in 2024 with what happened in early that month.
Oh. There you go. Is that worth tying up all that capital? Right in with your suggestions. Do you like this trade? Is this the worst VIX trade we've ever profiled on this show? It's certainly, shall we say, head scratching to say the least, why you would commit that much capital. You could do it with much less capital if you wanted. Why you would choose those strikes. You could obviously choose different strikes. There's a lot of ways you can go about this if that's the way you wanted to. Does this make sense to you? Do you see a hidden reason why they would do this? Or is this the worst VIX trade we profiled on this show? Interesting stuff. Let's see if we can find some other nuggets of gold out here, shall we? Like I said, someone was up to something while we were talking on the show, because VIX, a threatening 750,000 contracts, a couple 100,000 of that coming just in the last half hour or so since we started the show. I think I've sussed out what it was, listeners. Our old pals are back on the ratio side. It was the AUG 2135. Looks like 1/4 going up today. Looks like roughly about 25,000 by 100,000, pretty much, because the number one most active contract out there today are the AUG 35s, about 100,000 of those going up, and 27,000 of the 21s. Worth noting, there is OI on both of these strikes, so could be undoing what they had on as well, or maybe, actually, this is a good question of the week to put out to the listeners. Right now, are you down for a little ratio vertical out there right now? Would you be a buyer of this? It looks like it went up one of the prints for $4.03. So would you be buying this thing? Would you rather be a seller of this bad boy? Hit us up. Let us know. Would you rather sell one and buy 4? Then you got, of course, you're looking for that Volmageddon, which our other friend in the deep put spread does not want. Interesting stuff. That's obviously what's taking the top spot today. Number 2, 46,000 of the 15 half puts. 15 half strike. Can we get there by August? Number 3, 33,000 of the SEP 60, so right back to the fun. Number 4, 32,000 of our old pal, the AUG 17 puts. Like I said, I think those are going to keep trading like candy every day until that's the number 1 or close to it position out there in VIX land. And number 5, 30,000 of the SEP 16 puts. Yesterday, the number of the beast, 666 on the tape. The big dog, nearly 50,000 of the AUG 16 half puts. That was the subject, actually, of a flash poll we did yesterday with the Flowmaster on the option block. We asked you, hey, these are going up in huge chunks for around 39 cents. At that price, are you a buyer or a seller? And our audience had a hard time making up their mind. It was 50-50 for most of the life of that poll and ended up going out slightly biased towards selling. 53.1% want to sell them, 46.9% want to buy them. So clearly that 39 cents is the sweet spot. That's where our audience is split on that trade, which I guess that's what makes the market. 16 half puts. Number 2, 31,000 of the AUG 17 puts. Number 3, 30,000 of the AUG 60s. Number 4, 25,000 of the SEP 25s. And number 5, 25,000 of the comparatively meaty AUG 18 puts. For whatever reason, we don't talk a lot of 18 puts. Seems like it's always 17 and below, but 18 making it on the docket yesterday. Wednesday, a little more paper on the tape, 757 on the tape. The big dog, 49,000 of our old pals, the SEP 80s, followed by number 2, 37,000 of the AUG pars. Yeah, I remember this one now. This was a roll, I believe. They were rolling August out to September. Closing on the AUG pars, by the way. So taking off the AUG pars and rolling down, taking advantage of the vol decline to roll down to the 80s. Either way, they did it about 37 by 50,000 times, somewhere in that ballpark. Number 3, 36,000 of the AUG 17 puts. Number 4, 35,000 of the AUG 16 puts. Maybe some vertical action. Number 5, 32,000 of the October 35s. Those were definitely opening, so new positioning on the October 35s. Tuesday, the big dog of the week, as you would expect, with July options going the way of the dodo on Wednesday. 1.02 million contracts on the tape. So for anyone who wants to write in like they did last week, why do we have a random day with a million? That's why. 1.02 million on the tape. 98,000 was the big dog of our old pals. The July 17 puts. Folks had to have one more day with their favorites. They put up nearly 100,000 of them again just on Tuesday. That strike was just bonkers. Number 2, 43,000 of the July 16 puts. Number 3, 42,000 as well, or 42,000 of the July 17 calls. Number 4, 41K of the AUG 25s. And rounding out our list on a pretty hot Tuesday, 32,000 of the SEP 20 puts. Again, very meaty strike out there. Monday, 664,000 on the tape. The big dog, 60K of the July 17 puts. Yet again, that was everybody's huckleberry, it seemed. Number 2, 46,000 of the July 26s. Number 3, 34,000 of the July 16 half puts. Number 4, 31K of the AUG 17 puts. And number 5, 29, almost 30,000 of the AUG 40s. All right, Mr. Rock Lobster, a lot to unpack. We have Russell's crazy deep in the money vertical. We have that ratio I talked about, 1/4 going up today. We have our old pals, the July 17 puts going the way of the dodo, being replaced by the 17 puts in August. We have the 16 half puts dividing our audience for 39 cents. In fact, I think you voted on that poll, but I don't know what you meant. You said, I don't like it. So I don't know did you want to buy them or sell them for 39 cents, sir?
I'm buying the puts, but I don't like buying the puts because I don't want to buy them now because I know they're going to be cheaper. And it's one of these things where it's like, I think the market is acting like it wants to accept lower volatility, but our current president doesn't allow it because I swear he's turning his president. It's like a reality TV show, which is fun, to be honest. It trades a little bit, but for trading VIX puts, it's really heck. It is. This administration is heck on VIX puts. I don't think we've had a settle below in zone 1 all year. And that you can't make money on VIX puts when we're settling 16, 17, 18. We need 12, 13 to make some real money on these bad boys. So until we actually start to plumb those levels, I love the puts because I know historically they're a good buy, right? 18 is a good, like right down the middle for VIX, but we can't get to lower numbers, no matter how low realized vol gets. So that's where as far as the volume goes, I could see, but at the same time, it's like, what are you buying like the upside for? If we get the trade debacle, if we get Liberation Day 2, and I think that's what the vol buying hopefuls want.
They want something, that is for sure. Is there something you want out there in the vol ETP universe this week, listeners? Let's go find out, shall we? Our old pal SVXY doing a whole lot of nothing outside of the dust-up moment back in the middle of the week where it dipped back to about a 15.5. Yeah, about 15.5, I think, is where it sold off to. Right now, it was at 16.5 when we kicked off the show, which was literally unched on the week. It has dropped a little bit now, down to about 16 1/3, which puts it down a whopping 0.15. Not doing a heck of a lot out there this week. A good reek if you got some, maybe to write some premium against it out there. Only 3,300. The ADV is down to 4,500 contracts, down about 300 from this time last week. And then Russell's beloved V yield. He can't get enough of V yield. Brace yourselves for this one, listeners. I'm not sure if you're going to be able to handle it. V yield 25.26, down 4 cents. Can you handle the action? That is V yield. I don't think anyone can handle the action. That is V yield. And then our old pal UVIX 1995, up almost half a point, about 0.45 from where it was this time last week. About 17,000 contracts on the tape right now. The ADV is 24,000, down about 1,000 from where it was this time last week. UVXY 1720, up about 1/3 of a point from where it was this time last week. Putting up 70,000 contracts, so the UVXY Defense Force still active out there, still putting up numbers. The ADV is 85,000, though that's moving in the wrong direction, too. That's down about 5,000 from this time last week. And our old pal VXX, so I was talking to someone recently, I forgot where it was. They were a listener of the show, and they were telling me how they were mad that VXX wasn't moving down more. And so I said, oh, where are you lined up on the puts? And they said on the 20 strike. I was like, oh, no. You've got a long way to go, sir. VIX or VXX, excuse me, seems like it can't break 45 these days. 45 1/3, literally unched on the week right now, listeners. If you're in that VXX erosion camp, hopefully you're maybe a little less pessimistic or optimistic than the 20 handle. Maybe you're a little bit closer to the fire. Putting up 23,000 contracts on the tape. The ADV is 33,000. That's down 2,000 from this time last week. So there you go. There's your gamut of vol ETPs. Mr. Rhoads, we'll start with you. You're back in your weekend UVIX against SVIX game, are you not, sir?
Yeah, I own SVIX, and later today I've got a little alarm 5 minutes before the market closes to remind me to match that SVIX position with a long UVX position for the weekend. It seems to have historically worked out fairly well. Not most of them, but enough of the SVIX disasters that we've experienced have been the result of things that happened over the weekend. So makes a little bit of sense to it. I used to deal with, since we're making fun of my Southern nature, used to deal with a broker in a very Southern accent that would say, you put it in your back pocket and it's going to keep paying off. So that's what I'm doing.
To the Rock Lobster we go. Mr. Rock Lobster, anything catching your eye in your beloved inverse vol? And I know you've also been paying attention to a little bit of VXX. What's catching your eye out there, sir?
Look at a chart of VXX since July 9th.
Is it literally unched?
It is like a dead patient. The EKG of a dead patient. There was one little blast when Trump was gonna fire what's his name? Powell, but that was it. And I have VXX decaying at 27 cents a day, so it should be about $2.50 lower than it is right now since a couple of weeks ago. Again, more to my theory, vol ain't moving until the 1st. There you go, you heard it here. So go on vacation, play golf, go swimming, go fishing, visit Chicago for that 1 or 2 nice days it might be in the summertime. But other than that, you ain't going to get any excitement out of volatility.
So what you're saying is then, if I can read between the lines, is that you are not loading up on the VXX 20 puts, sir.
No, I am not. And it's just, things are probably, I would assume they loosen up after the 1st, but I'm sure we'll kick the can down around because I think Trump always wanted 10 to 15% tariffs all along. And I think that's what he's going to get. And I believe the market has already figured that out. And we have to stop him moving those date goalposts at some point.
All right, listeners, let's keep rolling. We got a little time, so let's get a real quick vol voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, I want to pay off some questions of the week. Also got some folks chiming in our live. If you want to head on over to the live, theoptionsinsider.com/pro is the place to do all that. A lot of people talking about the lack of Loggins and bemoaning that. So we have some folks saying, the Queen saying she can't imagine we won't see a Loggins again this year. I'm in that camp. I think we will as well. Mr. Unlimited said we had a crazy wild year already, close to nuclear wars, Mideast conflicts, tariff stuff. Vol or VIX is worn out. It certainly is right now. That's what the Rock Lobster is saying. Go away at least for the next few weeks. Let's see. Option God saying he thinks tariffs might cause more vol. Mr. Tokyo saying no more Loggins, no more 100% plus tariffs. It's better than before the tariff war. Talking about the long-dated Unity. Yeah, long-dated Unity calls are in the money, profitable by 50 million. Was that Roaring Kitty? I don't know. Maybe we'll get to that on oddities in a little bit. You're right. The Flowmaster he loves his Unity. He was talking about Unity again yesterday. So if you missed it, listeners, check it out. If you're not following us at Options, you're also missing out on a bunch of fun questions of the week. We just asked you a few minutes ago about that ratio spread, that 21-35 ratio spread, trading roughly 1/4 out there for about $4. You said at that price, are you a buyer, a seller, or what the hell is a ratio spread? Our producers have a sense of humor. And right now, our audience, 40% each, buying and selling. Somehow, 20% of you are saying, what the hell is a ratio spread? I think those are the jokesters amongst you. I think if you're listening to us, hopefully you know what a ratio spread is by now out there, listeners. But that'll be live throughout the rest of the day. So get over there and make your voice heard. Speaking of making your voice heard, we have a couple of actual questions of the week that are running right now, beyond just the fun, silly ones. Two right now that are interesting. I think they're all interesting, obviously, but these two running right now. First off, it's in premium harvesting season a little bit. A lot of folks got jazzed. Our guest on the Crypto Rundown on Monday, Mr. Bill, when I showed him the premium and the put wing in Circle, he nearly fell out of his chair. He started selling puts in the middle of the show. So Circle's been a popular one. I know some of our pro members, I may have dabbled in a little bit myself. I'll get to that on Options Oddities coming up a little bit later. But we said, hey, what's your favorite name to harvest a little bit of the old risk premium right now? I gave you three choices and the infamous other: Circle, Palantir, NVIDIA, and other. We've had a lot of write-ins. HIMS, a popular one, and that's popular in our pro as well. CCJ going out to Cameco, selling in uranium. That's interesting. Doesn't come on the radar that often, except when uranium's moving like it is right now. A Robinhood, that's a good one as well out there. And then our other actual question of the week, getting into the crypto realm, is Bitcoin, ETH, Solana, or Bitcoin, ETH, or Solana, or other. Which one do you think has the most upside for the second half of this year, given all the madness going on with crypto week? And right now, Bitcoin's taking it. Old school Bitcoin, 46.9%, 31.3% for ETH, which is wild. ETH had no love until the last couple of weeks, and all of a sudden everybody loves ETH. Hey, I'll take it. I got some ETH in my back pockets. I'll take a little bit of an ETH rally. Solana, 18.8%, 3.1% for other. And where do you like to harvest your risk premium right now? 42.1% are going the Palantir route. 31.6% for NVIDIA, 21.1% for Circle, then a bunch of others. Like we said, we told you the write-ins already as well. But now we got to get to the most dangerous part of the show, listeners. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we get dangerous. Now, let's see, by the way, where's the market hanging out right now? End of the show, pretty similar to where we were at the start of the show. S&P off about 0.12%, NASDAQ off about 0.1%, Dow off about 0.5%. VIX cash flirting around, right around 1670 or so right now. So not that dissimilar from where we were this time last week. Looks like I was the closest this week. This week it was myself, it was Russell, and it was the Rock Lobster. I was at 17.25. So maybe if we wait a little bit, I'll be looking better. But no joy for me right now at about a 1670. Still a little over half a point away. Russell 1820. Rock Lobster at a Columbus appropriate 1492. No joy for any of us. I was the closest, so I will go last. Let's let the Rock Lobster, the farthest away, let's let him go first. Mr. Rock Lobster, sir, what are you feeling for vol this time next week?
Total travesty. Like market moves less than 1%, and vol isn't below 15. It's like the fix is in. You fix something. That's all I'm saying. What's VIX right now? 16 something?
1670, 1669, yeah.
I gotta look. Yeah, see, yeah, that's where it's going to be next week. 1671. I'm sticking with it. It ain't going nowhere. It ain't going nowhere.
You're sticking with your go on vacation theme.
Yeah. You know, what's a good 16? Yes, I was going to try to do something historical, but I was trying to think of something around 1675. I can't think of it. Maybe that was the Prince William's War, 1670s. But never mind. I'll just stick with 16.
Not much that leaps off the page in the 1670s. I got to be honest with you.
I think it was the Pilgrims were fighting the second generation of Indians, I believe. That was the only one.
And if folks want to reach out to you to discuss their vol vacation or to talk to Pilgrims, where should they go? What should they do?
888-TRADE-01.
There you
Trade
go.
all these products. I trade them all myself. My travails, positive and negative. All the dirty laundry's out, all the wins are out, and my students have been doing it for 15 years, and for some reason they like it. Who knows how? One, probably make some money and learn something. There you go.
There you go. Make some money, learn something. Let the Rock Lobster sweat when to sell those calls, so you don't have to. Optionpit.com is the place to go. And Mr. Rhoads, you were at an 1820, so you were feeling things a little bit spicy. I did joke last week that I thought all of us would pretty much be right, maybe with the exception of the Rock Lobster, and that did turn out to be the case. We did hit all those levels, if ever so briefly. Mr. Rhoads, what are you feeling for this time next week?
Let's go with 1634.
16, a lot of 16 handles floating around. 1634.
And that is historic.
1634?
That's the beginning of the 3-year tulip mania during the Dutch Golden Age.
I was just going to guess. I bet you it's something with the Netherlands. I just had a feeling. 1600 screams the Netherlands to me. So there we go. I was on the right historical page, even if I didn't know it.
Tulip bulb speculation year. So I'm going with the lower end. I was going to go with when it burst, but I want to give Andrew a little bit of room there. So I'll go when it started.
I'm sure we'll have some historians in the audience who write in saying, here are the following extraordinary events that happened in the 1600s. So we'll have them at our beck and call for this time next week, listeners. And myself now, being the closest for the week, again, at about a 1670 right now in vol land. What do we have? A 1634, 1671. Not leaving me a lot of wiggle room, listeners. That's what I get for going last. I was thinking 16 and a quarter earlier, but that's not giving Mr. Rhoads a lot of breathing room to the downside. So why don't we do this? Why don't we do, tell you what, I'll push it down a little. I'll go 16, 15, and watch, we'll come in exactly at 16 and a quarter. So we're feeling a lot of 16 handles next week, listeners. I wish I had more wild market for you, but that's what we got. Looking at our chat, we got a lot of 16 handles in the chat as well. Man, the Queen's 16.5. Frank's scumming her at 1642. Oh, we got a 15 handle in there, 1585. So we got some 15s, but man, a lot of everyone's feeling sick. I get it. It's vol's just sitting here for right now. Hope you enjoyed your journey with us on the vol side. If you are on the on-demand side, that will conclude your broadcast week with us. If you're hanging out in the pro, just hang out. I'll be back in a little bit. We'll be talking all sorts of weird, wild, and wonderful trades on options oddities. But before we go, Mr. Rhoads, if folks want more Mr. Rhoads goodness in their life, where should they go? What should they do?
Follow me on Twitter. My full name at Russell Rhoads. I think I'm gonna post like a quick but more in-depth explanation of that 2200 bear put spread index. Just because I want somebody to tell me what's going on there, because I hate that I can't figure it out.
Hey, I will say, good on you for sussing out that 200 lot. It does help when it's on a ridiculous strike, because it leaps off the page then. If that was the 35-25, no one would have ever seen it in a million years.
No, but it's 4.3 million in premiums. That, which, if we were talking about the 30s versus the 40s or something, that would be a massive trade. Dollar-wise, it's up there. most definitely up there. But size-wise, yeah. I just gotta put a little sticky note up that says D's 200 puts, so I check them every once in a while.
There you go. Keep it on your monitor next to your family photos, and then the D's 200 puts right there for everyday reminding listeners. Like I said, that is going to do it for us. Back again in a little bit for Options Oddities for all of our pro friends. If you're not on the pro yet, what are you doing? TheOptionsInsider.com/pro. We have wild fun there all the time. Been doing the hot options report in there live every day this week as well. So that's just an added bit of fun that's been going on over there as I discuss behind the scenes with the Flow Master some of the nuances of options data. Interesting how some of that stuff doesn't hit as soon as you might like it for the hot options report, but that's a discussion for another day. Back again on Monday, listeners, for the option block. Can Uncle Mike continue his streak? I guess we'll find out all the way through to next Friday. Another episode, Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.